Back to the DAX rotation. And a warm welcome to one and all. And for those of you who have not seen me before, my name is Langers and I am the Scruffy Trader. What I'm doing with this series of videos is building up a strategy live in front of you. Now, I've been doing it for maybe the last couple of months, and let's just say it's having its moments. Got a royal smackdown last week, had to kill a trade off, and as I'm going through this, the original, it may work for you guys, but for me, I just can't see any merit in it at all. Its win rates fluctuate from 45 to 65%, but the downside is it's too much to bear. And the DAX will take you out in an instant, so you've got to let the thing breathe. So by nature, you've got to use a reasonable stop on it. So I've been trying to refine it somewhat. And that's kind of what this series is. But let's endure with it and see how we get on. So we'll just flash this over. Now, when I pull up this sheet, we'll start floating. As you can see, last week, it weren't good. In fact, it was terrible. We're not dead in the water because I've still got more than I started with. I started with £500 and it went up. Last month was pretty good. We didn't lose a day. This month is shocking. That's kind of represented here. You can see it. But why is that? Because with any strategy, you can have a winning streak, but it can be just pure luck. You just happen to be in the right conditions at the time. And that's why back testing and testing things is important. Now, back test is back quite a while, and on paper it seems fine, but in practice, real life, when you have money on the line and your stops have to be put in the right place, it's not a perfect world, and this is the results. You're getting battered left, right and centre. But what it does is, every time you make a mistake or every time it takes something from you, you learn more from that than you do the win. And that's the idea. So I don't necessarily mind the punches in the nose as long as I get something from it. It's basically a paid lesson in what not to do. So let us prepare today. I don't normally do this on a Monday, but I just want to start ironing a few things out, so we'll keep it going. Okay. Now, because of the costs, I think, bear with me. Yeah, we can still be at 60. We're on the cusp of margin calls. I'm going to drop that back to 60p just to allow it some room to breathe. Okay. And there's nothing wrong with going backwards. Okay. Because this experiment is, one, to build the strategy, but also two, to show the compound effect. And if you don't know what the compound effect is, compounding is this, where you're edging up the bid size all the time to give you a bigger return. And then when it gets to a certain level, it flicks over into a wage maker, which is this here. And you can sort of build that up. So if you're there, you are sort of only 6 pips, 6 trades a day. At 10 pips, give you 30 grand on £1.90. Simple stuff, but you've got to build your account first before you can go into a wage maker. And that's the whole idea of this. It's to show you it getting built. So let me sort of pause the camera a little bit because it is 7:15. We don't trade till after 7 just because the spread's tight though. But when it gets to 7, I'll come back and I'll fire up the chart and we'll see what happens today.
Well, we're waiting.
Okay guys, we're coming up to 7 o'clock. I've marked the chart. Today I want to go long. As you can see, I'm going in the face of a downward move, but I think it's a reasonable assumption. So let's have a little look. Get this ready to rock and roll. You should start seeing the orders coming in. I want to get in before this line, and the target is kind of up here somewhere. So that's what we're going to do. So let's have a look. Where are we at? Right. So the order's in. Here, if it doesn't get triggered, just going to hedge that to about there. Push that up into the middle of that box. And that's it. So what I'll do is I'll just let this play out. If the price recedes on itself here, I will follow that price down. But at this moment in time, I want it to go along. So I'll let it run and I'll come back to you at the end. And that's that, guys. Stop now. Okay. So, another couple of pieces to the puzzle added in. We didn't do very well today, money-wise. Well, it depends on which way you want to look at it. £10.9. So it's positive. Could be better because I could have taken it off a little bit higher up the scale. However, as you might have seen, I've been having a bit of work done in the house today. So I've had people running backwards and forwards. And also, I just wanted to see if it would get up onto the black line. Because the momentum was there. But it wasn't. The dotted line is basically a point of, once it breaches it, just take some money off. Because we are late in the day. It's been a long trade today. So I'll fill the journal in and we'll look at it again tomorrow. But this is what live testing is all about. It's not about getting the money in. I genuinely think some people forget that. When you're testing, you're looking to nail down a set of rules. That is it. I want to know what the extremes of the market are. In other words, how deep the stock is going to plunge before it will recover. I need to know how far it will move in a given period that I can get a profit and then start working out some form of risk reward that will fit this criteria. Because the ultimate criteria that I use mainly is golden eye. You see it all the time, zone to zone. It has a positive expectancy And I've shown that time and time again, and it's verified on third party. It fluctuates between 80 and 90%. Okay, and the days when it loses, it does hurt me. However, the days it wins more than compensates for that loss. So it's always in a positive expectancy. Now that system took quite a while to piece together. And when it's built, it's as easy as can be. It is as simplistic as you're going to get. And I want this the same. I want this nailed down tight, because the idea is it sets away between 7 and 8 in the morning, and you want to have a positive expectancy that when you're at work and you're not able to watch it, you can just leave it to get on with it. And that's the idea behind this whole testing process. At the moment, like I say, you've seen on the sheets, it came out the gate very well, but at the minute it is not very well. And that's the yin and the yang of trading. It's all right catching a wave, but you need to be able to ride that wave constantly. And in the sea of trading, that doesn't always happen. But I'll keep working with it, and you'll see it progress day in, day out. And then eventually, it'll be cobbled together into something that is workable and good. So keep tuned, keep an eye on it. I'm kind of enjoying doing it as well. It's something different to my day job, and it gives me something to look at and back test and play with while I'm waiting for my own trades to come into play. So there we go. So remember, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all next one.